Joe, why don't you think the bear bounce is ending? And that's what you told our producers today.
Because we've gotten a nice decline in the price of oil, and that decline is kind of stabilized at the lower end of the recent range. In addition to that, the growth trade is back on once again. Now, I'm not necessarily suggesting that when you look at that growth trade, you want to lean towards the high valuation growth names, but certainly growth of a reasonable price, that's carrying the market right here. Market's not breaking down if oil prices are going to behave well and the growth trade is present.
Growth at a reasonable price. OK, I'm thinking you're talking about the FANGs, the mega cap tech stocks. But as we said, what if that is a more defensive signal than anything else? And I didn't even mention the fact of what happened to the transports on Friday. And some are talking about a trucker crash, a trucking crash, a bust in trucking. What the implications are there. I mean, you sold Old Dominion. I find that pretty interesting that that's the stock you took to take profits in to get into Amazon. What's the signal here?
Well, the breakdown in Old Dominion was evident both on a fundamental and technical basis, and I wanted to allocate cash right back into the market. I did that through two names, Prologis and Amazon. I mentioned to you previously I wanted to be in Amazon, but I kind of disagree that this is just defensive posturing because you're seeing mega cap equities rallying. I think it goes a little bit beyond that. You look at the emerging markets; they're bouncing nicely.
It does.
China is recovering also as well. And in the taxable fixed income market, you're seeing things like municipal bonds. You're seeing investment grade. They're recovering the last 5 days. So I think there's a little bit of a message where markets are feeling a little bit better about the multiple headwinds that are kind of staring them in the face. I think the one thing, Scott, that prevents us from really building strong forward momentum and going immediately towards those previous highs is the fact that risk assets have recovered so much. Well, that kind of gives Jay Powell and the Federal Reserve a free pass to take the 50 basis points if they want in May.
I'm just suggesting that maybe the move in the mega caps, Joe, is a counter message. As what seemed like a great bounce back because of everything else defensive going on in the market. And as you said, it's way more. I'm not suggesting that the market has a defensive tone because of the mega caps all by itself. I'm looking at utilities, real estate, healthcare, staples, and the sectors that have all been doing well are defensive in nature. That just cannot be a coincidence, can it?
No, there's a correlation to the inversion of the yield curve for sure with the 2 and 10s. If the premise that growth is going to be scarce is there in the market, then investors are going to go and try and find where they could find the reliable growth. But that growth is going just beyond whether it's Apple or Amazon or Microsoft. It's Nvidia, it's Netflix today, and it's also in other places. So I think there, to a certain extent, there is a little bit of correlation between the inversion in the yield curve and growth itself. But overall, I think it's a good signal for the market. I think it's stabilization, and that's what we've wanted here for the better part of 2022.